His mind is that what is it that the budget can throw up based on what is it that the market expects, and therefore could there be a disappointment, or can this budget actually be one which does not disappoint the street? Remember the last few times, on most counts, the budget has stood tall, except for maybe just the issue of tax. So what are the market expectations first, and then I'll take you through some key numbers that you need to watch out for. So firstly, can the government take up the mantle of Capex again? I think this is a burning question to the minds of everybody. And one key part around this is also that December of last year was the first month which saw some bit of Capex coming to the fore. It was actually the highest month in a really long time, the best December in terms of Capex, but still the 9-month total was amongst the lowest seen in many, many years. So will the government announce or mention around what is it that the targeted expenditure for FY25 will be? Because the budgeted expenditure number is very, very large. So what proportion of the miss is something that the market will watch out for? If the miss is not too large, then the markets would believe that December and January have been good months. We know December is a good month, January could be a good month, and then Feb and March will also be decent. Next, will there be tax cuts to spur consumption? It could be as simple as taking up the standard deduction higher, and that will make the street believe that there is some bit of consumption spend that will come in because of taxation cuts. So that is something that people will watch out for. Are there schemes for job-creating sectors? We know that manufacturing PLI is something that the government is acutely focused on. Will there be more emphasis on any of those to ensure that there are, or make the market believe that the government is focusing on sectors which are going to create jobs? Infra, textiles, like I said, anything around PLI will all be welcome. Spending growth thus far has been 3.5% YOY, which is the lowest in 20 years. To reach about 6.7% is what the market believes. The budgeted estimate, of course, was, remember, 8.5%. But I think the market knows that the government has not spent that much thus far. So if the number reaches about 6.7%, 6.8%, the market will still believe that the government is coming out and going to spend in the next 2 months as well. Else, the spending number could look slightly wobbly. Will there be any other tinkering with syntax in some fashion or the other? Now, we know liquor is out of the ambit of the budget because it's a GST Council decision. But could there be something around cigarettes? Could there be something around something else? I think all of that will be watched out for. The key numbers, very quickly, fiscal deficit at or below 4.9% is a given. The street knows that the government is firm on the glide path. Will it go down to 4.7, 4.6% in the current year itself, or 4. If a number goes down to as much as 4.7, then the market will believe that the government is tightening the belt and will not spend that much. So it's good to have a good glide path, 4.9 or maybe 4.8. Too much of a lower number will make the street believe that the government is not going to spend, which might also not be good. There are hopes that LTCG will not be tinkered with too much. The market has had a painful last 4 months. The market will dearly be hoping that there is no tinkering out there. So I hope that is being listened to. Corporate tax cuts of any kind is unlikely, really. And the non-debt capital receipts number is a key focus area as well. We know that the divestment numbers and others haven't been quite successful thus far. So I think what is the estimate that the government puts out for the current year ending? And what is the estimate that the government puts out, more importantly, for the next year, considering that the budgeted estimates thus far have not been met for the last couple of years? I think becomes a key number. So that is something to watch out for. But Hiral, I would say 2 key numbers, the Capex spend number and any kind of taxation on capital markets, the 2 most important things that I'm watching out for.